As a starting entrepreneur, setting the price for my product feels almost impossible to get right. If I set the price too high, then I'm afraid no one will buy it. And if it's too low, then I might leave money on the table or maybe even lose money. Wondering what to do, I turned to George and his 30 years of experience, and I found out I was asking the wrong question.
Welcome to the Get Business Savvy podcast. I'm George Black, and I've helped lead 19 companies to over $1 billion in combined revenue.
And I'm AJ Bishop, a starting entrepreneur.
This is to AJ, but also to all you guys. If you start with pricing, you've actually skipped the first and most important question you need to ask. What's my profit strategy?
Oh, that's the question I should have been asking?
So AJ, it sounds like you're feeling all kinds of stuff and just trying to set your price. And honestly, I can completely relate. It's very emotional. And so I'm hearing the fear is a very natural thing. And I love that way you said, if I set it too high, maybe no one buys. If I set it too low, maybe I'm leaving money on the table. I'm just wondering what other emotions are going on with you as you're trying to figure out the pricing for your product.
Well, yeah, like you said, it's that fear. And I think a lot of it comes from imagining yourself trying to sell this product for way too high of a price, and then everybody just walking past you thinking you're crazy or thinking you're delusional for trying to sell a product for that price. And the thought of that is pretty depressing to think about. But then on the other hand, you're putting all this work into this product and you need to get a good value for it to feel rewarded, for your business to succeed in the long run. I mean, ultimately, we know our numbers. We know how much it costs to make the product. And if we're not charging more than that, we're going to have some problems on our hand.
Naturally, the price is, if it's too high, no one will buy it. And it gets into our head. And so I do all of this spreadsheets and this kind of thing and stuff like that. There's still the wonky financial guy that lives inside of me somewhere. And it's like, that doesn't satisfy at all. And it really doesn't help from the standpoint of what price should I charge?
Yeah. And you can play on the spreadsheets for as long as you want, but ultimately they're not going to tell you what people are going to think once they see the price and they see your product associated with it.
So just to pile on, guys, recently I saw a list of 54 pricing models. And in reading the list, and I'm familiar with a lot of this thought, I had never thought to just sit down and list them all and didn't realize there were 54. And as I scanned the list, I'm thinking to myself, but what about this pricing model and this one? I thought of a few more that aren't even on the list. If you start with pricing, you've actually skipped the first and most important question you need to ask. What's my profit strategy? Half of those, or 2/3 or 3/4 of all those pricing models go away because you don't need them. They won't work.
The way you frame the question, it's all making much more sense to me now. The question of what do I price this product at, that's so open-ended, and it's just a guess of what the market's going to say. But when you have a strategy for this is how I'm actually going to make money, then that informs the tactic, and you're not just playing this guessing game that I was playing at the beginning when I was trying to launch my product.
Right. For years, I've focused on 3 basic profit strategies. And then I was reading Myron Golden's book, Boss Moves, and he actually has a 4th one. So I was pleased to see 3 of mine are in the book. And then the 4th one is kind of the wannabe entrepreneur. And I thought, the reason I've never talked about it is I don't have anybody there. And then I realized, no, I have had people there, but I got them out of there as quick as I could. So let's look at these 4 strategies. They're basic. And honestly, I think this is all you frankly need to begin figuring out your pricing model. So for those of you on YouTube, you can see the grid that I've just brought up, the 4 quadrants. And for those of you listening in on the podcast, I'm going to describe this. So I'm calling this the Entrepreneur Profit Strategy Matrix. So on the vertical axis that goes up, it it's profit. So it goes from low to high profit. And then on the bottom axis, that goes from left to right, that's volume. So you have low volume to the left, high volume to the right. The bottom quadrant is low volume, low profit. And that's the wannabe entrepreneur guy. Okay. And it would be like a lemonade stand. Okay. You're not going to make much money on it, and you're not going to sell many of them. All right. And we're going to elaborate on all this stuff, guys, but I'm just giving you the quickie on the overview. If you go to the right of the lemonade stand, that's high volume, low profit. Okay. I call this the working hard quadrant because you got to work really, really hard to make a lot of money or to make any kind of money, frankly. So a good example of that's Costco. All right. So you got it right. They're selling a ton but it's at a low profit. So if you go above the wannabe quadrant, so it's low volume, but now we're going to high profit, that's arrived. You've arrived as an entrepreneur, and it's the specialty store is what I'm using to represent that. And then if you go to the right of that, which is diagonal to the wannabe, so it's exactly the opposite of the wannabe, is the wealthy entrepreneur. And that's high volume, high profit, and a good company to focus on would be like Apple Computers.
And this makes a lot of sense once you put it in the grid. I can kind of see my fears playing out in these quadrants because I know as I start out, I'm going to be low volume. And that wannabe and that arrived quadrant, those show perfectly those fears we were talking about in the beginning, where you're just a wannabe if you're not moving a lot of units and you're not making much profit on when you're selling.
Right.
And you really want to feel like you've arrived where you can make a good profit on each unit you're selling.
Yeah, AJ, that's great because what the quadrants do by focusing on profits and not price, now you can start to decide where you need to be. And that's what I want everybody to do. And by the way, we'll have a link to this in the description so you can go download this grid for yourself, because I think this would be a good little thing to just have handy and point, here's where I want to be. And pick your profit strategy. And we're going to get into this. And it also depends, what are you selling? And so most entrepreneurs, whatever you're doing, you're going to start off low volume. Okay. And I will just tell you a couple of things. So if you start off low profit in the bottom half of the grid, you're going to have a tough time going to the high profit. It's much easier to start at the high profit and come down. It's kind of like the teacher's first day at class. And the way you want to be on day one is tough as nails because you can always get easier. Okay. So it's like profit. You want high profit because you can always come down or throw a sale or have a discount. But if you start off as a teacher, really easygoing, you can't crank up the toughness. Okay. And it's the same way here. You can't get out of the low profit to the high profit real easily.
And George, do you have some examples of a time that might have worked when you went from a high profit to a lower profit, or maybe even a failure story of when you tried to go from a low profit to a high profit business?
Having led 19 companies, I've seen a bunch of this stuff. Let me tell you one currently I'm working with. They have been in the working hard Costco quadrant, high volume, low profit for years. And it's commercial furnishings, and they had a huge government contract. And literally, it was at like a 10% margin. And so they had to sell millions and millions and millions of dollars of furniture to be able to make a few dollars. And it didn't, and so when you've got $1 million in overhead, which they did, you could sell $10 million and you've just barely covered your overhead. You didn't even make any profit on that. So it's a working hard thing. And now what we're doing with that company is we're moving them to the specialty store quadrant. So that's the low volume, high profit. The way we're doing it is we're de-emphasizing product sales because in the commercial world, offices and all of that, there's a huge move to stay at home and all that kind of thing has been going on. So trends are changing. And so to substitute, let's refurbish, let's do service, let's fix your office equipment up because you're not needing it as much as you did before. Well, that's a much higher profit item. And we don't have to sell as much to cover that. And we don't need $1 million in overhead either. So our overhead comes down, our profits go up, and our volume dramatically decreases. And so, but I will tell you guys, this is tough because you are completely reinventing the company at that point.
I was just about to say it sounds like a difficult thing to do because as you're dropping in volume, don't you also need to be managing your overhead costs to make sure those are dropping with it?
Right. Yeah. Yes, you do. So you don't need as many people tracking orders. You don't need as many people doing design. So what we did was in advance of this is size down and begin outsourcing work because we don't need a full-time designer, for example. So we can just outsource that to somebody that has other business. So yes, you're exactly right. You've got to manage on the cost side. And that's really insightful, AJ, because we're not talking price here. We're talking your profit margin. And where I would encourage everyone to try to get into is that upper left quadrant arrived, what I've just sort of labeled the specialty store. And I'll explain that with an example, but that's the low volume and high price.
And would that specialty store quadrant be the quadrant that Michael, the eBay store reseller we met back in November, would that be where he falls? Because most internet businesses you would think are high volume, but I'm thinking he might be making high profit on his as well.
Yeah, so you're right. A lot of internet online businesses have a tendency to be in that high volume, low profit category. But I think you're right. I think if you listen to that interview with Michael and the way he runs his eBay business, first of all, it definitely is a specialty store because he focuses not on everything. He just chose men's clothing, I think, is his specialty. And then within that, he buys really smart. And he loves doing that. You'll hear him, he loves shopping the thrift stores and the flea markets and all these places, but he's looking for quality merchandise at an incredible price. And so he'll buy like a sack of clothes for $5, go through it, pick out a few items, mark them up to the market. It's an astronomical profit for him, but that's only because he bought well. And so I think that's a great example to bring up, AJ, because I think it shows, look, we're not focused on the price because the price he's charging is super competitive with everyone else. He just bought really, really well. So I think, would fall into that low volume, high profit category.
Okay, that makes a lot of sense for Michael. And I'm just dying to know, George, do you know anybody who's been in the lemonade stand for a while?
Yes, I do. and so when I saw that in Myron's book, I'm thinking like, well, I wouldn't even work with someone in the lemonade stand business, which is low volume, low price. They're not really selling lemonade. Okay. We're calling them the wannabe entrepreneurs. And you're a wannabe entrepreneur, but you're kind of like losing your rear end. Okay. To put it nicely. So I'm preparing for this podcast and I'm reviewing the companies I've helped lead, the clients I've had that I'm guiding, because I was looking for something current. And then I remembered this custom home builder. I helped lead his company for a few years, and he was definitely in the low volume, low profit. He was working with architects who loved him and would refer to him. And I'm talking multi-million-dollar homes. I mean, we're talking exquisite stuff. But he was so afraid, here's that fear again, like what AJ was talking about, of charging too much. He was actually kind of pricing like you see the home builders that come in with those subdivisions that just build a massive homes. So those guys are high volume, low profit. And he was trying to compete with them. Well, when I came into the picture, the house he was getting paid for that he was building at the time, he was using that money to pay off houses he built, and I'm not exaggerating, 4 or 5 houses ago. He was so upside down, he should have been bankrupt. But he was such a likable guy in the community, and everyone kept giving him more credit. And I was like, oh my gosh. So I got in there and over it, and literally it took 2 or 3 years. I moved him up into the specialty store quadrant, the low volume, high profit. We paid off, and I mean this for a fact, we paid off all the previous houses off the profit of like the next 2 or 3 or 4. And he made money. And then after that, he was making money hand over fist. Now, here's the interesting thing. He loved it. He didn't have any aspirations to do more volume. He liked the way he could manage that size of business. He was building, I don't know, 4 to 6 homes a year. He could manage the crews. He didn't get out of hand. He loved to go hunting and fishing all the time. You kidding the guy? He didn't want to be like by the way, he made a lot of money. He was wealthy, but he wasn't as wealthy as he could have been with high volume, but he didn't want all the headaches of that. And so that's what I mean. You got to pick what quadrant you want to be in, and then let everything flow out of that.
And it's funny how fear kept him in the lemonade stand for so long. And just by living into that fear, that probably kept him away from the hunting and the fishing, and probably made his job even more stressful than if he would have just made more or if he would have just charged more for his houses and earned a higher profit. He could have had that lifestyle that he wanted and that you eventually got him to.
Yeah. That you're bringing up something really, really important. He was under huge stress. He didn't know how to get out. He had created a gigantic mess. He didn't know how to get out of it. He was one of my earliest entrepreneurs that I helped lead and to get business savvy. And so I taught him about numbers and strategy, direction, and all of that. And by the way, guys, sign up for our exponential growth webinar. It's totally free. There's a link down below. Or check out the Business Savvy Guided Mastermind, which we're bringing groups of entrepreneurs together to slay these problems and crush them. And so, but he was one of my first guys. And the relief, oh my gosh, when you break through and you start understanding what's going on with all that stuff, man, it's just wonderful.
And what about Rackspace? Where did they fall on this grid? And did you take them anywhere from it?
Yeah. So guys, for those of you who don't know, I helped lead Rackspace hosting for a number of years, and they provided managed hosting sites for people. And so when I started with them, they were like, I don't know, about 80 million in revenue, and they would achieve 500, 800 million dollars by the time I left. So they were it's a commodity business. Okay. And this is a really, really good example, because where they should have been was in the Costco quadrant, high volume, low profit, but that's not where they were. They took themselves into the specialty store. And this is so important to understand. They were dealing with a commodity product, and a commodity product is like, your utility company buying electricity or your phone service, right? Well, what they did was provide hosting sites, but all the other companies, you had terrible service, and they provided fanatical support. So their differentiator was what made them a specialty store, and it gave them high profit. Now, I'm going to tell you how they got high profit, because they could charge a little more than everybody else for the service. And people loved the service because they knew if they had any problem at all, they could talk to a real person in the United States and get their problem solved. But that's not how they made the high profit. The way they made the high profit was by keeping customer churn down. What that means is, how many customers are you losing? Okay. And we knew if we could keep that churn rate down, and I think the numbers were like between 3 and 5%. In other words, if it went over 5%, we were starting to lose money. And if we could keep that churn down to 3%, we were making money hand over fist. Now you're going, that's 2 points, George. And I go, yeah, but we were talking millions of dollars. So they, in that business, I would have called them in a low volume. And then when I brought in my strategic process, the Next Level Navigator, which we do in everything I do, masterminds and the book and everything, and then they grew like over 600% in 4 years. So they had tons of potential. So even though you go like, wow, I mean, $80 million, that sounds like high volume to me. It's not in their business. Try, $800 million. That's high volume. And they just shot up like a rocket using my strategic process. So this is where you can take a commodity business, which would be in that working hard quadrant, and turn it into a specialty store, and you've arrived. So AJ, now that we've kind of sorted through the entrepreneur profit strategy matrix, where do you realistically kind of know from your market experience and research where you'd probably be on a profit level at this point, starting out?
Yeah, starting out, I know right now I'm looking at this and I'm seeing we probably fall in that low profit area. But I know if we want any success, we need to figure out a way to get into that high profit and into that specialty store quadrant. Even if it means a low volume, we need to be making a high profit on each unit we sell if we want to have any type of success.
Right. So guys, his product is a shoulder rehabilitation device. And so it's a mechanical thing that you do, and it guides you in exercises. I just want to give AJ a couple of ideas so that you guys can kind of hear how to start thinking about this stuff. So you've got this pretty standard product. You can make a nice little profit on it, but you're not making high profit. Okay. What you can do is start put other stuff with it. You can put an e-course with it. You could bundle it with an app so that everything gets transferred to the app. You can start increasing the value of what someone's getting. And you can also just simply show the value of it. And so I'll give you a hint. It's really talking about the value story. And you sell the value story like everyone who's done this for 30 days, they don't have any more shoulder problems. We've surveyed 1,000 people or something like that. You start learning and telling your value story. You put things in, bundle stuff with it that enhances the value, but doesn't necessarily increase the cost so that you can go to high profit.
So the key is to be able to increase your value without increasing the cost. And if you're able to do that effectively, that's how you can most manageably increase to that high profit area.
For most entrepreneurs out there, I don't think we know how to tell our real value. And so the perceived value oftentimes for most entrepreneurs is lower than the actual real value of what people are getting. It's just telling the full true value story. And I think when you do that and it's compelling, you're going to have high profits. You're going to end up in that specialty store quadrant, and you're going to be boosting your volume and moving to the right, increasing your volume all along.
And that's exactly what we need to figure out, how to increase that perceived value, which to match what the actual value is. And that way we can move into a place where we could start increasing our profits and then ultimately increasing our volume.
Yeah, that just gave me another idea. So, and this is what you get in my masterminds. My brain starts working, right? So here's the problem. If I buy your mechanical device and it fixes my shoulder, and then I give it to my friend who has a busted shoulder and he starts doing it, well, you didn't make a dime on that. I just lent him my device. But if you've bundled it with other stuff, that makes it like irresistible. Now I can't, if I just give it to my friend, yeah, he gets the device, but he doesn't get all the bundled stuff. For those who want to grow faster, either in profit or volume or both, and end up in that wealthy quadrant, come to my free webinar, the Exponential Growth Webinar. There's a link down below. Just click onto it and sign up, because I'm going to show you what I've discovered over the years are the key ingredients to growing exponentially. And this is something you can start immediately after the webinar is over. So sign up and I'll see you there. And check out this video right here. I know you're going to love it. And in the meantime, may you live truly free.